Currently in the middle of a trade. Got in a little bit later than I would have wanted, but I saw that the structure was continuing to proceed to the downside. We've been in a downward trend for the last couple of days or so. So I'm continuing to just kind of ride this wave, look for the setup. If you look at it from the perspective of, I typically don't trade outside of the gray zones. I don't like to initiate trades within the area between gray zones. But I saw this structure over here where it kind of helped to mitigate my risk in the event that the trade goes against me. And so I'm using, kind of this area right here as my stop loss area. I was able to enter in and looking to continue to proceed down. Where's my ultimate target? My ultimate target is down here, down at the next high volume node, high time frame, high volume node. And so I'm continuing to kind of monitor trade, allow it to grind on, continue to grind down, and I will look to bring my stop loss to break even on this next push down. I want to give it room to breathe. I don't want to get stopped out, but I'm going to bring my stop loss to break even here once I get this next leg down, the next push down to the downside. So this is typically once again where the framework that I taught you guys really comes into to shine because the perspective of we get these value area nodes or these high volume nodes, and we can trade as we push back on the other side of it and continue to show that there's a trend downward. So right now, we're just going to ride the structure down. We're in between gray zones. The gray zones are the high time frame, high volume nodes. So those are great targets for us. And then we just allow what happens in the middle to transpire and take place, and just keeping an eye on structure as it continues to migrate down. So this is what we call a value migration down. If we look at where we were yesterday, we saw that uh, right here was the value area based off of yesterday. We built up a lot of value here. Value here. We came down. We tested, tried to take pricing down a little bit. We pushed back up, and then as we transitioned into today, we see that there was some overnight activity above a previous high time frame, high volume node, and then it pushed downward. And then once we opened up right around here. We saw a push into that value, the high volume node, and then a push down. So that's kind of where we are now. And we're trying to see if the push is going to continue down. Are we going to get acceptance in pricing as we go down as well? And just kind of watching and observing and seeing it, if there's an agreement in pricing to the lower side, or is it going to transition and ultimately reverse course and head back up. And so this is where you manage risk. Pullbacks are a part of this process as well. So you don't want to set your stop loss too tight, which is, typically par for the course. You want to give the trade a little room to breathe. And then once it's ready to prepare for that next leg down, it'll make that push. And then at that point, that's when you can start to look to move your stop loss a little bit tighter or down to break even and so on and so forth. So that's kind of where we are now. I'm allowing this thing to migrate and rotate within this volume node here. And you can see now I'm down a little bit, but right here is ultimately where I start to pay attention if something is going to push back up against me. So this is also a reason why I oftentimes say I don't like to trade in between zones, because you get a lot of these potential rejections that transpire in this particular area. There is low volume overall in this space. And so with that being the case, it can come down, reject, and then look to push back up into this value area. And that would be the ultimate nullifier of whether I'm on the right side of this trade or on the wrong side of this trade. So we'll allow this thing to continue to rotate back and forth where we have kind of the rotation in place now. And then I will either take my loss or I look to see the pushback down, headed down in the direction that we anticipated it going um, shortly. So this is kind of where we are, and this is in the life of a real trade. You allow yourself to allow your thesis to work, your framework to work, and you just kind of monitor what's going on from a market structure perspective, and really take the signs for what they are, and let it keep on rolling. So that's where we are at this point. Currently down again, but once again, I understand that the rotations are a part of this play, which is why you typically like to get in a little bit sooner from an entry perspective. That way, you don't have to digest these, more significant swings. And if you think about, if I was trading 10 contracts, this would be I would be down, roughly 3K, right? So that's you have to get to a place where you can stomach watching the rotations happen, or if you want to, kind of become a scalper and take your profits pretty quickly, then that's something you can digest as well as a part of this process too. So yeah, that's where we are. We did a rotation back up to the to about right here, and then we see that there's kind of that push back down. So it came back up, filled some incomplete orders in this area of this candle, and now we're trying to see if we can get a continued agreement to the downside. And so that's where we are. We'll continue to let this rotate. The actual trade, kind of warning flag comes up if we get above this area right here. If we get above it back into this gray area, that nullifies the trade overall, which is why I said I got into this a little later than I would have wanted. But I trust that there's enough of a sell, the sell pressure to get from this particular high volume node down to our target, which is the next one below us. So we'll let this trade play out and see what happens. Otherwise, we'll take the loss, the lesson, and keep it moving. So hopefully you can observe this and understand kind of the nuances around entries and exits in trades, and understanding where it makes sense to observe your signs, trusting the process and the framework, and allowing that thing to kind of work itself through as a part of your trade management. So what you just saw here was a rotation back up, a retest of the high volume node that was in play, tapped in and rejected at this particular level, which is why I say these levels are pretty solid, right? You saw it come up and flirt around with this particular lower level of the high volume node. It rejected and now it's continued to push down. So either we'll see a push down into this lower level and then some support there. And at that point, I may look to get out. Otherwise, I'm looking for it to continue to break this level, push down a little bit, come back up, retest, and then ultimately land at the desired target of the gray zone that's underneath. So that's kind of what I'm watching at this point. And if I continue to see support in the rotation back up, maybe I'll go ahead and take the break even or move my stop to break even so that I don't risk losing any money on this trade as it rotates. I want to see a continuation down. We want to see an imbalanced move and not one of balance. And so we saw these two huge red candles there, and now it looks like we are starting to see a rotation in this particular range, which is fine. We just have to, kind of manage our trade accordingly, right? Instead of getting the continuation down to the gray high volume node, gray box below, maybe it continues to rotate in this particular range, which is fine. I'll just enter in the upper end of this range and then take profits at the lower end. And that's typically how you can trade the framework on range days. It's mostly meant for days that are moving in balance, but there isn't, a way that you can still profit and still make money on range days. And you just kind of take the sell, looking to go lower from the upper part of the range, and then taking your profits on the lower part of that range as well. So that's kind of where we are. Looking once again to see what kind of support is at this particular level as we get closer to the lower part of this range. Um, and yeah, kind of looking to see if we do finally get the break to the downside. That's what I would hope. But if there's not enough aggressive sellers to continue to push the price down. If there's an agreement in business right here, then we just read the market. We don't get greedy, and we uh, allow the market to do what it does, and we capitalize and extract money from the markets based off of what the market is telling us. And right now, it looks like it may be telling us that it's ready to range on out. With that being the case, I'm gonna go ahead and move my stop loss to here. So at least I know I'm going to make some money off of it in the event that it reverses. But at the same time, I'm going to also be smart about monitoring what's happening here. So I'd rather go ahead and take the $300 or whatever the case may be at this particular level, allowing it to continue to hold off here, and kind of make my decisions from here. So now we see there may be a little additional push at this point to continue downward. We'll see if the buyers come in and absorb it or if it's going to continue to move down. So once again, trade management 101, you allow the market to auction itself through whatever phase it's in. Right now, it looks like we may be at a range phase or a balance phase, and that's cool. Then if it starts to push back up again, I might go ahead and take. So there it is. I got stopped out. It pushed back up. I should have taken the money at the bottom of that range, which is fine. Now I know setting back up, I'll allow it to continue to cycle through this range. I'll enter in a little bit higher in this range and look to exit at the bottom of the range again on this next rotation. And that's cool. So we made a few dollars, not as many as I would have hoped, but you just kind of allow the market to tell you what it's going to do, and you rock and roll from there. And we can see it here that there's this rotation here where you want to get in on the upper edge of this and then ride the wave back down. So we'll reposition and re-enter and turn this in more of a range trading exercise where we get on the upper side of the value area of the profile and then ride it back down. Because my overall bias is still that we're going to come down and touch this gray zone, enter into the gray box, and it's just a matter of allowing us to build some value here. So we have this high value, high volume node. We've now started to build value underneath this gray box, which is a bearish sentiment, meaning that it's almost like we're building up value here, building up value, building up positions in order to push down. And the next target will be the gray zone underneath. So I used that first trade. That was my first trade of the day to gather some information, which is cool. I could have taken $300 win there. So instead, I took around 100 or less or whatever that number was. Um, and so we'll see what we're reading here. We might get the push down that I was anticipating because we're starting to see sellers come in here with the wick. Shout out to trade management. So now the thesis is to get in on the upper part of this range here, enter in with a sell, still looking to push downward. I still am of the mindset that we're going to ultimately trigger and go down until the market tells me otherwise. I just took an early entry and I see kind of a quick flash up here. That may be the last clearance before the market decides that it either wants to go down or maybe push back up into value. So we're going to see what this arm wrestling match is about as we continue to watch this level. The word of the day is patience. And when we get these rotations, these are actually good rotations to trade until they prove otherwise, right? So um, right here we see the point of control, which is why you see this action keeps bouncing off of it. We want to get above that, see if we can get back into an area of premium pricing before we enter into the market and then look to exit at the a level of discount. If that doesn't work, then we will see if it decides to break on out of this box. And then once it breaks out, we'll wait for a retest. And then we can enter in at that point and continue to trend down. So there's multiple options as far as entry are concerned. Um, and so we'll just kind of see what the market gives us.
Thank you so much. I think we had this for today. Thank you guys. Thank you.